This gives us an opportunity to be a large player, to get scale, advantages of scale that smaller lenders won't have, and, additional access to, getting more customers in the door.
Welcome to Powerhouse, where we interview the biggest names in housing and ask them about their strategy for growth. I'm Diego Sanchez, president of HousingWire. My guest today is Terry Schmidt, CEO of Guild Mortgage. Terry, it's so great to have you on the show again.
Thanks for inviting me. Appreciate it.
Well, you had some pretty exciting news last week.
We did.
Congratulations.
Thank you.
Could you walk us through the deal?
Sure. Well, I know you know a little bit about Guild's history, right? I've been with Guild. This is my 41st year here, so I've seen a lot of change. And, back in 2007, we did a management buyout with McCarthy Capital, private equity. They've been partners of ours for almost 18 years, fantastic partners along the way. And, in 2020, we went public. So we've been in this growth mode for, almost 20 years, and it's been, a fantastic ride. But we just really thought this opportunity really made sense for us to continue to grow as Guild and stay as Guild, just have a better capital, stronger capital partner behind us to continue our growth. So we ended up, really looking at Bayview and think it's going to be a great, powerful partnership.
And how long ago did you start talking with Bayview Asset Management?
Well, they've been a owner of Guild since the IPO. And so they owned, I think it was about 7% of our public stock. And they've always liked Guild. We've had a good relationship with them since the IPO. They've, always wanted to have, more stock, but the IPO made it a little bit more difficult to be able to do that. So they talked to us. It was about the third week of May. There was a public filing, and they thought, let's explore something different. Let's look at something that, can be a little bit bigger in some way, shape, or form. And so it ended up that they decided to take the company and buy the entire company. It was a cash offer. It was about $1.3 billion. And, the whole idea is to keep the company in place, continue to do what we do best, and just be a backer for more capital so we can continue to invest and grow in our future.
Yeah, I'm going to ask you a bunch of questions about how this strategy changes, if at all. But as the leader of the management team at Guild, why did Bayview make sense as a home for your company?
Yeah, well, first of all, I think that they invest in companies and they maintain their management team, and they like to keep everything the way it is, but take a supportive role. So, they don't have a retail platform. They've got a huge servicing book, a $700 billion servicing portfolio. And so really, it's super complementary to the businesses that they already have. So it made sense for us to continue to grow the brand and the name and have, more opportunities for us in the future.
Is it your intention to remain CEO of the business moving forward after the deal?
Yes, I'm still going to be here, and we still have our entire management team. So it's pretty much business as usual right now. Although the last month was a little bit crazy, to say.
I would imagine it has been a little bit crazy. So you mentioned the servicing book. Bayview also owns Lakeview Loan Servicing, which is one of the biggest servicers in the U.S. How are you going to be collaborating with Lakeview if this deal ends up going through?
Well, again, Lakeview has, their investment in servicing rights, and they've got their platform, they've got their management team. That stays the same. Guild, we have this customers for life strategy. We have a strong retail platform that they don't have. And, we've got a great servicing business as well, because we've got this, customers for life. And really, I think more than anything, it's going to be, how can we learn from one another and become stronger? But we're going to be sister companies within the Bayview platform. So we're still going to operate on a standalone basis. But I think just that the other opportunities that, we see with being a part of the Bayview family, and, they've got other fund families that are pretty much kind of coincide with the mortgage. They've got some, personal credit type finance companies. They've got a life insurance company. So there's other verticals that I think will help drive more customers, to Guild. So we're really excited about that. But again, our brand stays the same. Our management team stays the same. It's just getting more access to, other opportunities. And I think the other thing that they've got is they've got proprietary products. So they have access to, they've got a HELOC program, they've got non-QM products. So there's other, opportunities there for us that I think will also help us retain our customer going forward.
So you'll potentially be able to bring those different products into your distributed retail operation.
That's right.
So we spoke about your servicing strategy. Guild has been retaining a lot of the mortgages that you originate, and that's been your strategy for a while. Will partnering with Lakeview under this Bayview umbrella adjust that servicing strategy at all?
Not at all. I mean, they love what we're doing. We have built this customers for life strategy where, the whole idea is get that first time home buyer in the door. And then when they're ready for a refinance or they're ready to move up into a larger home, that we have that connection at the local level. We've built this brand where it's a grassroots brand, and it's been built, local fulfillment, local sales in communities across the country. And that's something that's very different to what they have. And so they're excited to be able to learn from that. And it's, the proof is in the pudding. I mean, it's worked. We have great recapture, rates in purchase, and we've got like 30% of purchase we recapture. In a refi boom, we've recaptured up to 70% of our, runoff on refinances. So it's worked over time. And I think that's, going to stay the same. And I think we'll both, again, learn from, what we do best.
You touched on this a little bit, but Guild is known as one of the great brands in distributed retail with very solid local relationships and businesses. Will being owned by Bayview change your channel strategy at all? Do you push into consumer direct, or are you staying focused on distributed retail?
Focused on distributing retail 100%. I mean, we made that decision many years ago, probably 20 years ago, to really focus on what we do best. And I feel like we've grown this brand, and it's one of the strongest brands in the retail channel out there. And it's been clearly by design and doing the right things. And we're going to just continue to do that.
Does this new ownership change your recruitment strategy at all in terms of, what geos you'd like to recruit LOs and branch managers in, or the kind of LO or branch manager that you recruit, or does that stay the same as well?
Our recruiting strategy, I think, is going to stay. It is going to stay the same, but I think it's going to get even stronger, because now we have we'll have a broader breadth of products, and we've got this capital backing to invest more in technology and, other opportunities. So I think it's only going to be a value add to the recruiting efforts, whether it's, on the loan officer side or, M&A. We still, today we've still got some, potential transactions that we're looking at. and that is business as usual as well. We had a couple of this last week, a couple of our potentials out there call and like, are you still interested? Are you still actively going to pursue this? And the answer is absolutely yes.
So you've been very acquisitive over the past few years. It sounds like that continues to be the strategy, but only maybe more so because you have a fresh capital infusion.
Yeah, absolutely. I mean, we've always looked at, is it the right fit? Culture first, and then does the model, kind of, will it work in under our platform? So we always say one plus, one has to equal three. So it has to be right for both of us. Similar to this Bayview transaction, it's gotta have value on both sides, which it certainly has. And same with the M&A when we're looking at other companies. It has to make sense for them. It has to make sense for us, and we have to add value, and that's not going to change.
You've talked about culture before as a big part of what you look at when you're looking at potential acquisitions. Are there other aspects of companies that are important to you right now in terms of your M&A pipeline? I mentioned geography before. It sounds like you have some new products to play with this Bayview deal. But what kinds of things are you looking at beyond culture when you're looking at M&A targets?
Oh, I think we look at, what does the product mix look like? Are they 100% focused on the retail, platform? What's their leadership look like? Is their leadership, do they want to stay and continue to grow the business as partners with us? Those are important aspects. And we like areas that we don't have as big a presence in, the Midwest, the South, the Southeast. All those areas are very, meaningful to us. But uh, you know, again, it always goes back to culture. And it's funny that we talk about culture because even though Bayview is this large organization, the last month that we've spent with them and getting to know them, their culture is so similar to Guild. They want a good business relationship. They want to have a trusted relationship, and they want to grow together. And so all those pieces that are so important for us when we are looking at M&A targets, kind of we looked at the same thing as far as this transaction with Bayview, and they all check the boxes.
Yeah, that's great. You mentioned technology before and having a fresh capital infusion to maybe work on some projects. Do you have projects lined up that you're thinking a lot about that this will help kickstart or invest more in?
I mean, more of it is just really expanding the foundation that we already have. And of course, a lot of work around AI. There's so much capabilities there. And, we rolled out an AI engine that was really related to all of our products and underwriting guidelines, a big library. It's been extremely successful, saved a lot of our ops teams and sales teams a lot of time and effort, making sure that they get the borrower in the right product. And so there's just so much more there. And that's really the area that we're putting a lot of emphasis in right now.
One of the things I've noticed in my conversations with other CEOs of IMBs is there's an emphasis right now on building out your own tech platform as opposed to relying on, vendors out there for POS, LOS, CRM, the pricing and packaging engine. Um, how do you look at that buy versus build in-house decision?
Well, first of all, we've built a proprietary platform, and our proprietary platform is in servicing and loan origination, and they're combined. So we've gone way back. I mean, since I've been here, we've been building upon that foundation. So we've got this great synergy between those two channels, and it's really served us well. And I think that's a big part of why our customer experience is so good, because we don't have to onboard a customer to, a servicing platform. Everything's very, very well integrated. And, now we've got our CRM that's extreme Salesforce, backed by Salesforce, but extremely integrated into our production platform and servicing as well. So all those have come together really well. And now it's more, if there's certain areas where small pieces of technology that we could connect into our main proprietary system, we look at doing that, and if there's opportunity there. But yeah, we've had a proprietary system for many, many years.
That's really interesting. And, you talked about Recapture earlier and Guild being good at it. I imagine you've built technology to help your sales force get after those recapture opportunities when rates fall or for whatever other reason. Has that been an area of building and technology focus for you?
Huge area of focus. And, this last in 2020 and 21, when that refi boom during COVID happened, we captured 70% of the runoff. And it was really because of our sales teams and our CRM being so connected to our servicing book. And the loan officers, we not only have agents in servicing that are directly connected to regions of the country. They get to know those originators out in the field, but they also get certain information about their customers. So if their customer doesn't call servicing and calls the loan officer directly, they have some basic information just to help answer some questions, which, so we've got this connection all the way through that life cycle with the client. And that's been extremely strong. And then again, we took Salesforce and kind of connected it into our servicing platform and our loan origination platform so that we can drive, leads. If there's a loan that's in the money, that goes to the originating loan officer, they connect to their client. And, that's just, you have a lot more stickiness with that. And as an example, when last year, I think it was the third or fourth quarter, where there was a couple little quick refinance opportunities, we were on it immediately, and our recapture went up to 60% for 2 months. So
That's very
yeah,
cool.
it's really cool.
Two of your competitors have basically bought leads and lead platforms. Rocket bought Redfin, Lower bought Movoto. And so, and a big part of those deals, and their executives have talked about this on the show, is controlling that lead flow.
Mm-hmm.
As you see these transactions happen, do you have any concerns about Guild being able to get access to lead flow?
We've been really with the way we built our platform, we've really been working on that client life cycle for years, and getting that customer earlier on in the process is something we've been focused on for years. With this local fulfillment, we've got, we've got lots of relationships with realtors that we've had. I think we have the strongest relationships with realtor bases across the country than probably anyone. And then we've got also a search engine through HomeBot that we've had forever. So the customers are getting information out there with connecting our realtors and Guild to the customer, and that's been really successful for us. So we feel like we're pretty far along the way. We just took a different approach, right? We took a local fulfillment approach with realtor relationships as well. But it's, it works. Our recapture is great, and our customer service, our customer sat scores are fantastic. If you go to Zillow, we have the most 5-star ratings of any other lender with Zillow. So it's working.
It sounds like it.
Yeah.
So how many LOs are you up to across the company now?
Oh, I think we're about 2,300 loan officers.
Okay.
Yeah.
So continuing to grow, and you'll keep growing that post transaction.
Yeah, I mean, we feel like there's so much opportunity for us. And just with this connection and merger with Bayview, it's just going to get better.
Do you see 2025 continuing to be a year of consolidation where, a lot of lenders are looking at scaling up?
I mean, I do see there's going to be more consolidation. I think there's going to be, a group of larger players and smaller, very small players, and there's not going to be as much in the middle. And so that again, this gives us an opportunity to be a large player to get scale, advantages of scale that smaller lenders won't have, and additional access to getting more customers in the door.
So it sounds like it's mostly business as usual with this deal,
It is.
which is great. What does the approval and integration timeline look like? Is it pretty fast because it's a going private transaction?
The approval process is really the key. And, we think this is going to close probably because of all the approvals that we have to go through, probably going to close in the fourth quarter. And as far as the integration, I mean, we're going to be standalone doing what we do. So the integration is going to be pretty seamless. So that'll go by fast, but we've got, probably 120 days on the approval process that just is just something that we have to go through.
Well, Terry, I really appreciate you coming on the show to talk about this deal. I know you've been really busy for the past several weeks. I appreciate you taking the time.
Oh, thank you. And we're super excited. We're super excited for our future.